What's up, everyone, and welcome back to ChatGPT Insights. We're kicking things off with a monumental deal shaking up the AI world. OpenAI has just confirmed a massive, 5-year, $300 billion agreement with Oracle for computing infrastructure. This isn't just big. It's one of the largest cloud contracts in history, fueling OpenAI's ambitious project Stargate Data Center initiative and potentially reshaping the future of AI development. But hold on, because this colossal deal between OpenAI and Oracle is already sparking some serious questions. With OpenAI's current revenue and projected profitability timeline, how exactly will they foot this $300 billion bill? We're diving deep into the financial puzzle and what it means for the future of AI infrastructure. Next up, a legal showdown. OpenAI and its CEO, Sam Altman, were in the spotlight facing potential sanctions in a trademark suit brought by AI device startup IYO Inc. over the use of the IO name. Did they face penalties, or did they manage to sidestep the legal storm? We've got the details on the judge's ruling. And finally, get ready for some real-world AI in action. Amazon's Zoox Robotaxi service is officially launching, offering free rides in Las Vegas. Plus, ARM is launching its new AI-optimized Lumex chip lineup for mobile devices. You absolutely need to stay tuned for all the insights. Hit that like button, subscribe to ChatGPT Insights, and ring that notification bell so you never miss an update. OpenAI and Oracle strike a $300 billion deal to power AI's future. Get ready for a seismic shift in the AI landscape. OpenAI, the powerhouse behind ChatGPT, has just inked a historic 5-year agreement with Oracle, committing a staggering $300 billion to purchase computing infrastructure. This isn't just a large contract. It's one of the biggest cloud deals ever, crucial for OpenAI's ambitious Project Stargate Data Center initiative and signaling a massive acceleration in AI development. This colossal pact involves building 4.5 gigawatts of data center compute capacity, a scale comparable to the output of over 2 Hoover dams or the electricity consumption of around 4 million U.S. homes. The announcement follows a period of explosive growth for Oracle, whose stock surged after reporting a massive increase in future contract revenue, with CEO Safra Catz hinting at major customer deals. While the initial whispers of this deal emerged in June with a filing about a cloud services agreement, the full scope is now clear. Project Stargate, initially announced at the White House alongside U.S. President Donald Trump with partners like Larry Ellison and SoftBank, aims to solidify American leadership in AI. The project, initially projected at $100 billion, has ballooned, with OpenAI securing commitments for over half of its $500 billion goal, and construction already underway. This move places OpenAI and Oracle at the forefront of the AI arms race, alongside giants like Amazon, Microsoft, and Google, who are also pouring billions into data center infrastructure. However, this deal is not without its risks. OpenAI is currently operating at a significant cash burn, with projected annual expenses far exceeding its current revenue. Oracle, meanwhile, is placing a substantial bet on a single, high-growth customer, potentially requiring significant debt financing for AI chips. Analysts and industry observers are watching closely, recognizing this as a gamble on the continued exponential growth of AI and ChatGPT's widespread adoption. The success hinges on OpenAI's ability to maintain its innovation edge and navigate intense competition from rivals like Google and Anthropic, as well as its complex relationship with major backer Microsoft. This is just the beginning of the story, and the implications are vast. But what happens when a deal of this magnitude raises more questions than it answers? Oracle's massive OpenAI deal, big questions emerge. The tech world is buzzing about the $300 billion, $5-year cloud computing deal between Oracle and OpenAI, confirmed to fuel OpenAI's Stargate project. While the sheer scale is unprecedented, this blockbuster agreement is raising significant eyebrows and prompting critical questions about its feasibility and implications. At its core, the deal's financial structure is puzzling. OpenAI, projecting revenues around $13 billion in 2025 and not expecting profitability until 2029, faces the daunting task of financing a contract averaging $60 billion annually. Industry analysts, like Jack Gold of J. Gold Associates, note that while AI revenues are expected to soar, the willingness of venture capitalists and funders to essentially provide a blank check to OpenAI highlights the high-stakes nature of AI infrastructure investment. Oracle, however, is in a strong position, securing payment regardless of OpenAI's profit margins, provided the contract isn't terminated. Gartner VP analyst Chirag Dekate offers a nuanced perspective, emphasizing that the $300 billion figure is likely not a fixed, immediate commitment, but rather a projection based on staged ramp-ups, usage tiers, and potential renegotiations. The real critical factors, Dekate points out, lie in the specifics of the GPU technology, pricing, and networking tiers, which remain undisclosed. Changes in the rapidly evolving GPU market, such as the rise of alternatives like TPUs and custom ASICs, could significantly alter the deal's value or lead OpenAI to reallocate funds. Further complicating the picture are questions surrounding purchase minimums, make-good clauses, and the role of Microsoft, OpenAI's primary partner, which holds a right of first refusal for new capacity. Given the pace of AI advancement, unforeseen market shifts between now and the deal's 2027 start date could impact the headline figure. Dekate will be closely monitoring Oracle's ability to convert its substantial remaining performance obligations into revenue and whether capital expenditures begin to outpace returns. He also highlights the potential for shifts in chip market dynamics and the possibility of OpenAI's margins per query or model differentiation declining. Despite the uncertainties, the deal is a significant reputational boost for Oracle, reinforcing its position as a provider of critical enterprise cloud infrastructure and potentially driving more general cloud hosting contracts. This massive financial commitment from OpenAI is certainly a bold move. But what happens when legal battles arise from naming conventions? OpenAI and Sam Altman sidestep sanctions in trademark dispute. In a significant legal reprieve, OpenAI Inc. and its CEO Sam Altman have successfully avoided sanctions sought by AI device startup IYO Inc. The ruling comes in a trademark lawsuit concerning the use of the IO domain name, where IYO alleged OpenAI violated a court order. Judge Trina L. Thompson of the U.S. District Court for the Northern District of California determined that IYO had not provided sufficient evidence to demonstrate that OpenAI had violated the temporary restraining order. Consequently, the court found no basis to impose sanctions at this stage, with a formal written order expected at a later date. This decision means that OpenAI can continue its operations without immediate penalty regarding the disputed name while the broader trademark lawsuit proceeds. The outcome provides a moment of clarity for OpenAI amidst its rapid expansion and ongoing development of AI technologies. While OpenAI navigates legal challenges, their infrastructure plans are making headlines globally. But let's pivot to another major tech announcement that's reshaping the market. Amazon's Zoox Robotaxi service launches free rides in Las Vegas. Get ready to hail a ride with a difference. Amazon's autonomous vehicle company, Zoox, has officially launched its fully driverless robotaxi service, offering free rides to the public in Las Vegas. This marks a significant milestone in the advancement and public adoption of autonomous transportation. The service, which has been undergoing testing and development for years, deploys Zoox's purpose-built, bidirectional vehicles. These cars are designed from the ground up for autonomous operation, featuring a unique form factor and advanced sensor suites to navigate complex urban environments safely. The initial launch area covers a portion of Las Vegas, allowing residents and tourists to experience the future of mobility firsthand. This rollout is a major step for Zoox and Amazon, positioning them as key players in the rapidly evolving robotaxi market. While competitors like Waymo and Cruise have been operating in select cities, Zoox's launch in a high-profile tourist destination like Las Vegas is expected to generate considerable public interest and valuable real-world data. The free ride offer serves as a powerful incentive for people to try the service and provide feedback, which is crucial for refining the technology and user experience. The success of this launch could pave the way for wider commercial deployment and expansion into other cities. Meanwhile, in the world of AI hardware, ARM has unveiled its new AI-optimized Lumex chip lineup. Designed specifically for mobile devices, these chips aim to enhance the performance and efficiency of on-device AI applications, from advanced camera features to personalized user experiences. This development signals ARM's commitment to powering the next generation of intelligent mobile technology. From driverless cars to cutting-edge chips, the pace of innovation is relentless. What's the key takeaway from all this groundbreaking news? And that's a wrap on today's ChatGPT Insights. We saw OpenAI and Oracle forge a massive $300 billion cloud deal, OpenAI dodge sanctions in a trademark dispute, Amazon's Zoox launch free Robotaxi rides in Vegas, and ARM roll out new AI chips. What a show. Don't forget to hit that like button, subscribe to the channel for more cutting-edge tech news, ring that notification bell so you're always in the loop, and drop a comment below telling us what you think about these incredible developments. Follow us on all social platforms for even more insights.